This is the Treu Real Estate 911 podcast with Lisa Treu. Lisa will share up-to-date real estate information with you that you need to know.
Well, the Treus, they always are a wealth of good information, and Lisa has plenty of information I think will come as a big surprise to people that think they might not be able to afford buying a home. Some of the new loan products that are available are definitely changes that could end up benefiting folks that might not have 20%, for example, to put down, but do have a good job and regular income. And wouldn't it be nice to stop paying the landlord and own your home? Now, before we get going, if you are not already there, go to TreuRealEstate911.com. That's TreuRealEstate911.com. When you get there, it all makes sense. You will find the greatest collaboration of information available at one website about Palm Beach, Martin County real estate that is available, including the ability to search the MLS in real time. And the Treus, they are always ready to help you. 7 days a week, buying, selling. If you have questions, reach out to them. 561-972-8326. That's 561-972-8326. Lisa, as we are getting going in the show today, give us a little bit of an overview of the local real estate market. I know a lot of people have been concerned during the course of January about the pace of things. Has February been any different?
February is better than January. However, considering this time last year, it is more quiet. And it's not quiet when you go to restaurants. Last night I was walking down to the beach to see the moon on Atlantic Avenue. Mm-hmm. And there were literally people everywhere. Every restaurant was full. So we know they're coming here to escape.
Yes.
And yet we're not seeing as many people in the marketplace as what we typically would expect at this time of year.
Is there a prominent reason why people are here but they're not buying?
I think that it's a lot of things. Uncertainty in, what they're going to be doing. Many retirement people are unsure of, am I retiring as fast as I thought I was going to? And so we're seeing people are talking about the move to Florida, but they're talking 2 years, 3 years, 4 years out. And there's still some properties that are selling with multiple offers. So it's not hopeless. It's just that you have to be perfect. And I'm seeing a lot of people just misreading the market, not understanding what's going on, and talking about what they need instead of really getting that formula correct.
What's working best right now and what's the slowest?
Believe it or not, our single-family homes are doing pretty well, surprisingly. And properly priced townhomes are also starting to pick up. They've been a little sluggish. Mm-hmm. And so our listings with those deals are starting to get good activity and good interest. But single-family homes, we are seeing our spring season starting earlier this year. And part of it is just when anytime interest rates change. Now, that could be that they go up or they go down. It causes people to start to do something. And we're definitely seeing that people are happy about rates not going up as much as they thought they would, and they want to take advantage. And the other thing is they remember and they've heard the stories how they haven't been able to find a home or their friend wasn't able to find a home last year. And so they are trying to beat that kind of surge of summer activity, which typically starts mid-March.
Makes sense. Okay, so let's transition into the prominent topic you wanted to discuss today, which is the ability to be able to purchase a home without having a lot of money to put down. We know that, once upon a time we had, the loans where, things got creative and everything else. Then we know that there were regulations that were passed coming out of that period of time that prevented those types of loans from happening again. It seems like now that we are into the maturation of the real estate recovery, we're seeing the go-between where standards are being relaxed with lenders because we've seen low levels of defaults. But at the same time, they're obviously not going to even legally be able to go back to where they were before. So tell us a little bit about some of the changes with these mortgages and who can take advantage of them.
The changes, and I'm always cautious when we have these creative loans that come out.
Yes.
I always cringe, and Brian knows I usually make that face whenever we talk about them. it makes me anxious. It makes me concerned. And I always say it's been too soon since we had that consequences of everybody in the world should be able to buy a home. I had a lender one time tell me, now he was active in giving loans to people that he knew were honestly not making what they made, I'm sure, called stated income,
Yes, right.
Because stated income, there was no verification.
Yeah, you said he made $1 million. Put it down.
And I couldn't say, no, you don't. There's
Right.
no way you make $1 million, right? It's called stated income for a reason. So he said everybody seemed to make $1 million. And when you looked at the statistic,
Jeez.
they all lived in Palm Beach County, and they were not self-employed. They were all working at places where, gosh, if I could make $1 million there, I'd go work there too. And so those kind of loans, I hope they never come back.
Yes.
I really do. Because what happens is, oh, what the heck? I would like to live in that house. And, oh, they're appreciating, so I can always get out of it if I can't afford it, was the mentality. And we knew that didn't last very long, right?
Right.
So what has happened now, what has relaxed, is the down payment factor. You still have to be able to afford the home. And they look at that very heavily. It's not just based on credit score. Back in the stated income days, if you had a great credit score, which most people did before the crash.
Things went south, yeah.
They had great credit scores. They put down that they made whatever, and then they were able to get the loan. And so they're not only going on credit score today, they're going on, can you actually back up what you say you earn with proof? And they make you prove it till almost the day before closing, that you still have your job, you're still employed. They verify it. It's not just what you say you want. It's what you want to make. It's actually what you're paying the government on. And so some of the exciting things is that if you were renting, or if you've wanted to take that step up to that next home, or even your dream home, and your reason for not doing those three things is because you don't have the down payment, there is possibly a really great option, multiple options, whether first-time home, move-up home, or dream home. You can even be a luxury buyer and have the income and the ability to have that home, just maybe not have as much money as you thought you needed. I mean, back in the day, you needed 30% on a luxury property.
Oh,
Easy.
sure. Coming out of the recession, for sure.
Yeah. So now you can get into homes with zero or nominal down payment up to 10% and be living the lifestyle that you want. And I just think that's such great news.
So when we're talking about this, obviously the first-time home buyer comes to mind. We've discussed this even somewhat recently, that if you have enough money for first, last, and security, while you almost certainly have enough money to put down, that one makes a great deal of sense for maybe somebody who's entering a career field, has some student loan debt, still has some accumulated savings. Are you seeing that people are taking advantage of that?
I don't think people know about it. It's one of the reasons where I was at a seminar with about 25 top agents recently, and this information was shared, and I looked around the room and I could tell it was new information. And so if the real estate professionals don't know about it, I can guarantee you the consumer doesn't know about it. And I am now getting calls from different lenders telling me, hey, guess what I can do? Well, our lender has told us this a long time ago and has been doing this a long time ago. And yet I think this is kind of new information out there, period. So I don't expect anybody listening to know. It's not shame on you for not knowing. The reality is some of the programs are new, and it takes a little bit of creativity. Now, the other thing that people listening might think is, well, my credit's not good enough.
Yep.
This kind of program is going to require a low sevens, mid sevens kind of score. There are products for as low as a score of 640. So this is something for almost everyone out there that is paying the landlord or says, look, I've just outgrown my home. I bought this home, and maybe you bought this home when you were married or not married, and now your family's expanding and you need more space. there's definitely a way to help most people listening.
What happens a lot of times around here, especially, is the aspirational element to it. You've talked about the HGTV effect, where sometimes people, when they're looking, might have somewhat unrealistic expectations on the front end, especially first-time home buyers. But the truth is, a lot of people decide they do want to stay here, and there is certainly everything that you might be interested in that comes with the lifestyle in South Florida. But you might not have the ability to generate that kind of money to put down. So the move up buy opportunity, talk about how that enters into this equation for somebody who maybe is identifying, you know what, if I made one more move, that would be it. I see something I like. How does this play?
So there's definitely help for you too. The nice thing, if you have higher credit scores, you can go to a conventional product, which pushes your price point up to almost $500,000, which is kind of crazy. So if you have a credit score over 700, 104,000 max income, you can get 1% down payment, which is awesome towards your closing cost even.
That's pretty remarkable. So we're talking about 0 down and then 1% applied to closing with a good credit score up to 500,000.
Yes. So if you are getting money back from Uncle Sam this year, if you're doing your taxes and realize that you overpaid the government, which I know Brian probably would say is not a great decision, and yet what is even, I think, a more challenging decision if you just blow that money. Let's invest that money. And remember, 83% of all retirement wealth comes from what? Real estate.
Don't own the roof over your head, then think about how much money you've paid to somebody else that they've accumulated that for sure. That's a really instructive stat. So as we're taking a look at this, you mentioned there's something here for everybody. We've talked about the first-time home buyer, the move up buy to 500,000. Now, the other thing that came to mind, you mentioned even some of the super luxury properties for 10% down. Who would be a good candidate on something like that?
Someone maybe that's a little younger, or maybe someone who wants to invest in a home. Maybe they need to do some updating. So maybe you have the money and yet you're looking to buy a fixer-upper and you're saying, how do I buy that home and put my down payment down? Well, maybe just reduce the down payment. Now you have some cash to invest in that property. It's also amazing for people that are just in those phases of life. Let's face it, kids are expensive. Where you have the income, you can handle it. It's just hard to kind of get enough to build that equity that you want, that down payment that you want. So this gives you a chance to go ahead and get into your property as long as you can afford it. And I think it's great. I mean, these programs are wonderful as long as you have the income to support it. And these programs were designed to make sure that you actually can afford this home and you're not going to say, oh gosh, what did I do?
Right. And these are available across all property types, right?
Yes. Now, the single family homes definitely qualify, townhomes qualify, and some condos. Condos have some additional restrictions. And so, we have to look case by case on condos. But most people are buying single family homes and townhomes. So those are 100% an option for anybody out there.
And then something else that comes to mind, maybe we do have more money that we could put into a home, but if we don't have to, and there are things we'd like to do, we might be able to apply more money towards actually renovations and projects. Are you seeing where, some folks are kind of realizing the view of the possible?
Yeah, so it does open up what you can do. Because if you find a great home with great floor plan that's perfect for you and an amazing location that you want and it needs work and you don't have the cash to do it, you generally take a pass on it because you're like, I don't have the money. I don't see how I'm going to get the money. So eliminating or reducing the down payment is a great way to help you with that. And so we are seeing people that are looking to do that. And we worked with a couple of luxury buyers recently from the north, and they are ideally going to make this their permanent residence. Mm-hmm. And so there are buyers from the Northeast out there. There's a lot of them, actually. And I think they're going to keep coming, especially as they're all doing their taxes this year.
Yes.
I think the reality is going to hit them.
And the Amazon effect becomes that much more real as people realize, it's not going to get any better up here either.
No, it's not. And of course, the weather helps. And we know it helps because the visitors are here at, I think, record numbers. I have never seen our streets and our restaurants so full as I have the last 2 weeks. And so I do believe the weather certainly is our friend long term. It's just a matter of what is happening in the short term.
And of course, the economy, the concerns about the economy were overdone. And, we are seeing things stabilize again. I know some people had concerns about that in real estate. Has that pretty much abated at this point?
Yeah, I think people are starting to calm down. It's helpful. I think anytime anything happens on a national or even international basis, it causes people to go, what's this mean to me?
Yeah.
And so they just kind of stop and do nothing, right? And sometimes that is the right decision, to stop and do nothing until you know what to do. And yet we are seeing that, people aren't worried about it.
Yeah, nor should you be. The fundamentals, we have not seen any change in the economy. Listening to mainstream news media tell you about economics could be dangerous to your health and just informationally generally, but that's a whole other story. All right, if you would like more information, the Treus, again, they're ready to help you. Reach out to them at 561-972-8326. That's 561-972-8326. Lisa, coming up, you are going to have seminars to tell us a little bit about firsthand what you have available in the marketplace. Tell us a little bit about this initiative.
Well, we are very excited to actually answer the questions we get all the time in a fun group setting. And we are going to be doing these once a quarter where we come together, answer your questions, bring great resources to you. And once again, it's going to be a fun time together. So if you would like more information on buying your first home, your move-up home, or your dream home, I'd love to hear from you so that I can get you the dates and the times and the places as we get these scheduled. And I just think they're going to be a great way for us to answer your questions a little faster.
And as dynamic as you are, they're always going to be entertaining as well, I have no doubt. And the Treus available, again, 561-972-8326, or you can always keep posted on everything that's going on with local real estate at TreuRealEstate911.com.